Hello, my name is Steve Bigelow with the Candlestick Forum. I'm going to have kind of more of a bland presentation because Camtasia is not working on my computer, but we can see what's happening in the Dow. We've had a bearish harami, a doji, a hanging man up here in the overbought condition. It hasn't changed the direction of the market as far as the Dow is concerned. However, it's given you indecisive sell signals. That tells us if they start trading this market lower, there's going to be a pullback at least. The pullback is more evident in the NASDAQ. The doji shooting star, the bearish left-right combo, a very strong reversal signal, and then we traded below the T-line. Remember last week we illustrated that as long as you were staying above the T-line, you're in an uptrend. When you see a candlestick sell signal and a close below the T-line, there's been a major shift of investor sentiment. That was evident in NVDA. The left-right combo, the gap down, but indecisive. When they tried to bring it back up, it looked like it could be doing a J-hook pattern. But notice once again, a bearish harami telling you the buying had stopped, and then the close below the T-line told you there's now a major change of investor sentiment following that bearish left-right combo. That was when you were started to close out long positions and possibly think of going short. The same scenario on SAVA. You could see the dark cloud, the bearish engulfing signal, then the lower open. This kind of gave you the impression that there could be selling. Notice over here you had a selling day, but it wasn't a sell signal. It didn't close below the T-line. Now you had two candlestick sell signals. A close right on the T-line made this very simple. If you were long SAVA, it needed to open positive and trade positive. If it opened lower, you closed out the position immediately. First Solar, the same scenario. Looked like it was going to support here on the T-line and start back up, but then you had that bearish flutter kicker signal and a close below the T-line. Very simple T-line rule. If you see a candlestick sell signal and a close below the T-line, close out the position, especially when you're up here in the overbought area. With the market indexes getting a little bit indecisive up in the overbought area, that would make adding to short positions much more relevant. As you can see, there was a evening star type signal on CHPT. Came right down to the major support level here at the moving averages. But notice how they could not get back up above the T-line when they did a bearish kicker signal that told us we had a bearish J-hook pattern in progress, And it pretty well demonstrated that everybody that was watching the 50 to see if it was going to act as support, when they were gapping down through that level, that was pretty good confirmation that our bearish J-hook pattern was in progress. The downtrend was in progress. That's when you could be shorting with much more confidence. SHLS demonstrated indecisive trading and a gap down coming out of the oversold or overbought area. Whenever you're in an uptrend and you can see they've gapped it down below the previous day's open and then started going the other direction, that's a very strong sign that there's been a change of investor sentiment. Get ready to go short. That made our decision to go short on Big C very easy. Overbought condition, long-legged doji, spinning top, doji, close below the T-line. Where do you think the next likely target is going to be? Down here at the 200-day moving average, as long as your stochastics were heading in a downward direction. This is not rocket science. This is merely taking advantage of the information built into candlestick signals and the indicators, such as the T-line being a high probability confirmation formation or indicator. But with 9,500 trading entities, it's very easy to scan to see which stocks are having the strongest signals. As we recommended ABM today, there was your left-right combo. There was your doji sandwich with a doji gap up. If it opened positive, what was it telling us? They were confirming all this buying for these buy signals and telling us the T-line that had been acting as a resistance now was not there. Where was the next likely target? Up here at the 50-day moving average. Knowing what signals and patterns to look for based upon big price moves, such as in CMP that had a big message. The definition of a candlestick message is, even though they gapped it way up, when they opened it, they traded it below where they opened, some profit taking. But the message was they wanted to get into this one with great enthusiasm. So when do you start buying? When you can see that the selling has stopped. Now you can anticipate with a high degree of probability that you're going to be in a 45-degree from here. When you know the direction of a trade because of how it reacts to human nature, that allows you to put the appropriate trading strategies, such as options or buying the stock or buying spreads, that would make this a much more profitable trade. After the sell signals and the NASDAQ closing below the T-line, there's a high degree of probability there's going to be a pullback. Where? That's where you can put all sorts of indicators on. It could be back to the 34. It could be back to the 50. You could put your Fibonacci retracement numbers, not so that you're looking for the target, but you're looking to see what type of signal occurs once one of those levels is hit to tell you that's where people are buying. That'll be it. We'll see you in the chat rooms.